Welcome back. Fuel producer Sasol says oil prices are being cut by a third, hit its earnings hard. But thanks to its chemicals business, the group's earnings did not fall to the same extent that oil prices have plunged. The company today posting headline earnings per share down by 17%. This for the year that ended in June. Shareholders got a full year dividend payout of 18.50 per share, but that's a few rands lower than the previous dividend. Reporter Nompumelelo Siziba caught up with Sasol's outgoing CEO. Of course, he has announced his resignation, David Constable. She started by asking how the company had reacted to the plunging price of oil.
Fortunately, through programs we've implemented, the Business Performance Enhancement Program and the response plan to the lower for longer oil price, which hit us in November when OPEC took that decision to go after market share and keep output up, we responded and have had a successful year in protecting the company. And so to put that in perspective, to that 33% reduction, our headline earnings were only down 17% to 49 Rand 76 per share. Earnings per share were actually up to 48 Rand 71 year on year. So I'd say a commendable performance with a lot of headwind on oil. Now, I said to a degree in my opening comment, because we really need to get the point across to our shareholders and to South Africa that Sasol is also a chemical company. In fact, we've been re-rated as a chemicals company by the JSE and by the MSCI, who track different industrial organizations. So that all took place this year, and they did that because they see the revenues of our chemicals business and our margins and profit margins from chemicals being extremely strong, and then they see the ethane cracker being built in the U.S., and then they put that all together, and in fact, Sasol is more of a chemicals company than an energy company tied specifically to oil.
David, to what extent did the weakness of the rand help mitigate the earnings performance that came through?
We had a 10% weakening in the rand year on year to offset a little bit the oil price weakening. So it obviously helps us. You can think about, just to put it in perspective, a 10 cent weakening of the rand exchange rate annually, if it's annualized over a yearly basis, contributes 650 million Rand to profits at Sasol. So it's quite a big swing for us, and that's how you should look at it going forward.
We know that you've got a business performance enhancement program. How have you been doing in terms of keeping your costs down?
It's been widespread. It really went after business complexity in the organization, which has been around for years, organizational complexity, how we're structured, and process complexity, just the ways of working in the company and how we do that. So that was our main focus, is to simplify the company, make it more efficient, make it more fit for purpose. That was all run through the Business Performance Enhancement Program through 11 different streams. And our target is to take 4.3 billion Rand out of the company on an annual basis, so annualized. Those savings are every year, and I'm saying at least 4.3 billion. We expect to get that as a run rate at the end of this financial year. So we've been at it for a couple of years now, and we're just seeing great, doing better than what we'd expected.
Now, David, a serious investor has always ensured that they've got Sasol in their portfolio. But of late, with the lower oil price, obviously some people may be having doubts. So what would you say to a potential investor who's thinking about Sasol but is not really sure about its value proposition?
Well, certainly, even through this down, even with a 33% reduction in oil price, I think our existing shareholders find comfort in how the lower for longer oil price has been managed. We were proactive. We were fixing the roof while the sun was shining with the Business Performance Enhancement Program long before the oil situation hit us, and we were able to respond effectively with the response plan. So the shareholders can take comfort in the fact that management is on top of things. And they were able to see a dividend this year of 18 Rand 50. And so it didn't drop dramatically. Yes, it was at 21.50 last year, but that was all-time record results for the company was FY14, all-time highs. So they're still seeing a very strong dividend, and we'll continue to protect that dividend. That's why we've cut back so much on our CapEx and just focusing in South Africa, Southern Africa, and North America. So that will continue, and we're in a very good position going forward. We've got the company it's fit for purpose from a long-term profitability perspective. I'd say for new shareholders, it's something that you want to seriously consider because, as I said, oil prices will be going up in the next few years, and you don't want to catch that wave too late. I think it's a great opportunity, and people are going to be making a lot of money in the energy business. And plus, we've got a diverse portfolio of chemicals, which I explained to you. So we can take these swings through down cycles because of the diversity of the company. And so I think it's a great play for diversity. It's a great play on oil. It's a great rand hedge as well with the weakening of the rand, 650 million drop into our bottom line as well. All very positive. Now, oil prices may go down to $35 or $40, possibly, but it won't be sustainable. So any drop in oil prices is obviously a great time to buy. If oil prices don't go down, then people need to get on the train now and watch the share price go up.
That was the CEO of Sasol, the outgoing CEO David Constable.